Welcome to the deep dive. We're not just skimming the surface today. We're going deep, really getting into the sources, connecting those dots for you. Our focus, a story that honestly feels like a real turning point for digital assets. Evernorth Holdings, Inc., their public listing, their huge ambition.
Yeah, it's a big one. The headline news is pretty massive in itself.
Right. Evernorth is heading to the NASDAQ. They're doing it through one of those SPAC mergers with Armada Acquisition Corp. U. And the ticker symbol, well, it kind of says it all. XRPN.
Very direct. Can't miss the focus there.
Exactly. But the ticker is just the start. The mission here is enormous. They're looking to raise and then deploy over $1 billion.
$1 billion. With a B?
Yep. To build what's set to be the world's largest institutional treasury focused solely on XRP.
It's a huge statement of intent.
It really is. And this isn't, just another crypto fund popping up. This feels different. It feels like serious institutional infrastructure being built right out in the open on a massive scale.
Excellent.
So our mission for this deep dive is clear. We're honing in on the analysis you really need. We've got 4 key questions we want to tackle. First, is this structure, this Evernorth model, genuinely like a crypto version of Berkshire Hathaway, actively managing its main asset to boost shareholder value?
That's the big comparison everyone's making, yeah.
Second, how real is the institutional interest? We hear $1 billion, but who exactly is behind this? What's the caliber, the scale of that commitment?
We need to look at the names involved.
Third, the nuts and bolts. What's the actual timeline, the paperwork trail? We need that step-by-step guide to their Q1 2026 NASDAQ debut.
The regulatory path is crucial, definitely.
And finally, the big picture. How does Evernorth fit into Ripple's long-term game plan? How does it act as a catalyst for the whole XRP ledger, the XRPL?
It's clearly designed to be more than just a standalone fund.
Okay, so we've dug through the official announcements, the SBI Holdings financial releases, Evernorth's own press stuff, plus analysis from crypto media, TradFi media.
Yeah.
Especially on the deal structure and that initial buying spree they went on.
That initial accumulation was incredibly fast.
Right. But before we get lost in the data, we absolutely have to nail down one foundational point: what Evernorth isn't.
Yes. That distinction is absolutely critical. It's what sets this whole thing apart from, the usual crypto products people are familiar with. Evernorth is not a passive exchange-traded fund, not an ETF.
Okay, explain that difference, because ETFs are huge right now.
Exactly. An ETF is basically a tracker. You buy a share, it represents a certain amount of the underlying asset, say Bitcoin or XRP, and it just follows the price up and down. Simple mirroring.
Passive.
Completely passive. Evernorth, though, it's structured very differently. It's an active, publicly listed digital asset treasury, or DAT.
DAT.
Yeah, it's a specific type of corporation formed in Nevada, built for active management, active deployment of the asset, institutional-grade participation in the digital asset economy. Which means its goal isn't just to track XRP's price. The goal is actually to outperform simply holding XRP passively.
Okay, that's a huge difference. So let's unpack that active model. If the aim is boosting value per share, not just tracking, why this specific structure? Why go the SPAC route? Why a corporate treasury instead of, like you said, an ETF or maybe a closed-end fund?
Well, the structure itself really tells you a lot about their ambition. The core mission for Evernorth is driving institutional adoption of XRP. That's the headline.
Right.
And to do that effectively, they needed 3 things: scale, speed, and rock-solid governance.
Okay.
The IPO mechanism, they chose that SPAC merger with Armada Acquisition Corp. II. ACI gives them scale and speed.
How so?
Well, instead of a traditional IPO, which can be long, unpredictable, the SPAC route is sort of a pre-packaged path to that NASDAQ listing under XRPN. It lets them get listed faster.
And raise the money faster, too.
Exactly. It allows them to bring in that huge PIPE, financing the private investment in public equity much more quickly than floating normally. We're talking over $1 billion. That speed is critical, especially given the regulatory environment we'll get into later.
Okay, so the SPAC gives speed and scale. But why the corporate treasury model specifically? Why not just launch a spot XRP ETF? Those are attracting tons of capital right now.
Yeah, it's a good question. It really boils down to, I think, control and mandate. For a big traditional institution, just buying an ETF share, it still leaves gaps, right? Who's actively managing the risk? How do you deploy it?
I see.
Evernorth aims to solve those problems directly. It's designed to give institutions simple, liquid, transparent exposure to XRP. How?
By letting them just buy a normal stock, XRPN, listed on the NASDAQ, suddenly that institution doesn't need to worry about setting up in-house crypto custody, navigating all the tricky compliance rules, managing private keys, all that complex stuff.
So it abstracts away the crypto complexity. Precisely. They buy a share of XRPN. Evernorth handles all the underlying complexity, but within an institutional governance framework. Audited, regulated, the whole package.
Okay, and the active part comes from that Treasury structure.
Yes, the digital asset treasury, the D@8 model, specifically allows for active management. Now, we've seen other companies set up corporate treasuries, mostly holding Bitcoin passively. The sources mention maybe 130 to 160 public firms holding BTC, with MicroStrategy being the obvious example.
Right.
But Evernorth wants to be the biggest XRP treasury. And, crucially, an active one, not just holding, but managing.
Which brings us right back to that Berkshire Hathaway comparison.
Sure.
Munger and Buffett, they weren't passive holders, were they? They actively put capital to work to grow book value per share. How does Evernorth try to copy that philosophy with XRP?
The core principle is pretty similar, actually. The mandate is basically the same.
Right.
Increase the value of the underlying asset per share over time.
Okay.
An ETF is fine just tracking the market price. Evernorth wants to do better. They aim to actively grow XRP per share.
How? What's the mechanism?
By deploying their huge XRP holdings into activities that generate yield. This is the key. It transforms them from just being a secure vault into an active capital manager.
Okay, so this active yield strategy is really the heart of what makes them different. You mentioned 3 primary ways they plan to do this. What are they? And importantly, how do they handle the risk? Especially when they're promising institutional level controls.
Right. This is where it gets interesting, and we need to dig into the specifics. They've laid out 3 main paths, and each seems chosen pretty carefully with compliance and risk in mind.
Okay, number 1.
First up is participation in institutional lending.
Lending XRP.
Yeah. Deploying secure chunks of their XRP holdings to regulated financial institutions. Think collateralized loans, maybe large counterparty deals. The yield here comes from the demand for high-quality collateral within the regulated digital asset world. But, like you hinted, it's not risk-free.
Exactly. Isn't that adding credit risk, counterparty risk, the very things traditional finance tries to minimize with crypto? How do they manage that?
That's the core challenge of this active model, right? They don't eliminate risk entirely. No yield strategy is truly risk-free, but they aim to minimize it using institutional grade controls. Meaning they'd likely only deal with regulated counterparties, demand stringent reporting, probably require significant over-collateralization, and they'd likely use specialized custody solutions, maybe smart contracts, that allow secured lending without Evernorth completely losing control of the assets if something goes wrong.
So moving the risk from Wild West crypto to something more like managed institutional credit risk.
Exactly. That's the idea. It's a calculated managed risk profile.
Okay, interesting. What's the second strategy?
The second one is liquidity provisioning.
Providing liquidity. How does that work?
Basically, using their massive XRP stash to add depth to order books on exchanges, both centralized and potentially decentralized ones where XRP is traded or needed for settlement.
So they become a market maker, essentially.
In a sense, yes. By providing liquidity for both buyers and sellers, they help tighten the price difference, the spread, and they earn fees from the trading activity that happens against their orders.
And that ties into XRP's main use case.
Absolutely. XRP is fundamentally about global settlement. The more liquid the XRP market is, the better it works for cross-border payments. Tighter spreads mean cheaper, faster payments. Evernorth profits by helping XRP do its job better.
Is there risk there too? Market volatility?
Definitely. Market volatility is always a risk. If they provide liquidity in decentralized finance pools, DeFi, there's also something called impermanent loss risk if prices move sharply.
Right.
But given their scale and institutional focus, they'll likely concentrate on large regulated markets where their depth is actually needed. And they'd use pretty sophisticated algorithms to manage positions and probably hedge against big, sudden price swings. It's a symbiotic play. They earn yield by improving the market for XRP.
Okay. Lending, liquidity provisioning. What's the third leg of this active yield stool? This sounds like maybe the most crypto-native one.
It is. Strategy number 3 is pursuing selected DeFi, decentralized finance, yield opportunities.
Ah, DeFi. Now that carries its own set of risks, doesn't it?
Yeah.
Smart contract bugs, governance issues.
It certainly does. And that's why the key word here is selected. They're not just going to ape into any random, unaudited DeFi protocol with the institutional treasury. That would be reckless.
So how do they approach it?
Very methodically. We'll touch on this more later, but a key piece is using compliant tools, specifically Ripple's own stablecoin, RLUSD, as a secure way into DeFi.
RLUSD, Ripple stablecoin. Yeah.
Yeah. This lets them participate in, say, well-known audited lending protocols or yield farms built on the XRP ledger, or maybe closely integrated chains, but in a way that maintains that institutional-grade risk management profile they need.
So they're trying to capture some of that native DeFi yield, but wrap it in layers of compliance and risk control.
Precisely. They're looking for that sweet spot, decent returns, but minimizing the really scary risks, like smart contract failures or rug pulls. It shows they're not totally ignoring the native crypto ecosystem, but they're entering it very carefully.
It really sounds like they're crafting a unique hybrid, taking an active deployment strategy, common in some hedge funds, applying it to digital assets, but then wrapping the whole thing in the safety blanket of traditional finance governance.
That's a great way to put it. And that safety blanket, that governance piece, is absolutely non-negotiable if you want serious institutional money and a NASDAQ listing.
How are they ensuring that?
Through strong public commitments, they've stated very clearly that all their financial reporting will be independently audited by a major audit firm. That's table stakes for institutional investors. It ensures transparency, rigorous oversight, far beyond what you typically see from private crypto funds.
And transparency on the asset itself.
Yes, also crucial. They plan to publicly publish their XRP holdings. In crypto, proving your reserves is vital, right? For a public company holding potentially billions in one asset, that level of disclosure about the core treasury holding is essential for building shareholder trust and allowing proper valuation.
Makes sense. Now, an ambitious plan like this needs serious leadership. Who's actually running Evernorth?
The leadership team is definitely key to the whole project's credibility. The CEO is Ashish Birla.
The former Ripple executive.
Exactly. He was a senior figure at Ripple, heavily involved in scaling up RippleNet, their global payments network. So his background is perfect. He deeply understands traditional financial services, the needs of banks, but also knows the XRP ledger and its potential inside out. He bridges that gap.
And he's not alone.
No, absolutely not. He's backed by a full C-suite CFO, COO, chief legal officer, chief business officer. And the key point is they all apparently have extensive backgrounds in capital markets, traditional finance.
So not just crypto pioneers, but experienced financial operators.
Right. This is a team built to run a multi-billion-dollar, publicly traded financial entity, not just a tech startup. Birla himself talked about this symbiotic model, generating returns for the XRP shareholders, while also actively supporting XRP's utility and adoption. It's positioned as a long-term, aligned growth strategy.
Okay, so we understand the how, this active treasury model. Now let's shift to the who and the how much. A billion-dollar plan needs serious backing, especially from players comfortable with complexity, provided the regulation is clear. And the sources show they've definitely lined up some heavy hitters.
Yeah, the financial backing isn't just strong. You could argue it validates the entire Evernorth concept. The goal, as we said, is raising over $1 billion in gross proceeds.
How does that break down? Where does the money come from?
It's a combination. Part of it comes from the cash held by the SPAC itself, Armada Acquisition Corp. too. But the really significant chunk comes from that private investment in public equity, the PIPE financing. That's where the big institutional checks are written.
Okay, let's talk about the anchor investor. That commitment from SBI Holdings in Japan seems huge.
It's absolutely foundational to the whole deal. SBI committed a massive $200 million in cash.
Wow. $200 million cash.
Yeah. And this isn't just, a small venture bet for them. This looks like a major strategic move by one of Japan's biggest financial services groups.
Why would SBI put in so much?
Well, SBI sees this as fitting perfectly with their long-term strategy. They're heavily invested in building a digital asset-focused financial ecosystem. Remember, they already have SBI Ripple Asia, that joint venture promoting XRP in Asian markets.
Right.
So by anchoring Evernorth, they're helping create this massive compliant global hub for institutional XRP exposure. It supports their own regional plans by ensuring there's a robust, well-capitalized entity driving global demand and providing institutional access.
That $200 million cash injection from a player like SBI must send a powerful signal to other institutions, right? Like a big stamp of approval.
Absolutely. It screams, we've done our homework. We believe in this structure, this team, this asset. It definitely helps de-risk it for others looking at XRPN.
And who else is on the list? It wasn't just SBI.
No, the rest of the investor list is pretty impressive too. It gives us broad validation from different corners of the crypto and fintech world.
We're seeing names like Ripple itself, RippleWorks, Pantera Capital, Kraken, and GSR. That's quite a lineup.
It really is. It covers a lot of bases. You've got Ripple and RippleWorks, which is their affiliated charitable foundation, confirming that deep alignment with the ecosystem we talked about.
Okay.
But then you have Pantera Capital. They're a heavyweight in digital asset VC. Their involvement signals that they see strong investment return potential here. They believe this active treasury model can actually generate alpha.
Makes sense. And Kraken and GSR Exchange and Market Maker.
Exactly. Having Kraken, a major global exchange, and GSR, a top-tier digital asset trading firm and market maker involved is also really significant.
Why specifically?
Well, first, it shows they recognize the need for these kinds of compliant institutional on-ramps. They see where the market is going. Second, they're likely going to be key operational partners for Evernorth.
In what way?
For things like liquidity provisioning. Evernorth will need deep liquidity pools and sophisticated trading partners to execute its strategies effectively. Kraken and GSR are perfectly positioned to help with that. Their investment is almost like a strategic partnership confirmation.
So it's like a collective vote of confidence from across the industry that this regulated vehicle, XRPN, is the right way forward for big institutional money coming into XRP.
I think that's a fair reading. And you even have Ripple co-founder Chris Larson participating personally, which adds another layer of internal conviction.
Okay, so the money's committed. Once it's all raised through the SPAC merger and the PIPE, where does it actually go? What's the primary use?
It's very focused. The vast majority of the net proceeds, basically almost all of that $1 billion+ is earmarked for one thing: funding open market purchases of XRP.
Building that treasury.
Exactly. Building the world's biggest institutional XRP treasury. There's a small slice for working capital, covering operational costs, and paying the transaction expenses for the SPAC deal, but the overwhelming priority is acquiring the asset.
Now, this leads us to that initial accumulation phase you mentioned earlier, Section 2.2. The sources say Evernorth moved incredibly fast, even before the public listing is done. Tell us about that near billion-dollar head start.
Yeah, this part is pretty astonishing. Evernorth apparently didn't waste any time. The data we have from around late October 2025 suggests they snapped up roughly $947 million worth of XRP.
Wow.
That translates to about 388.7 million XRP tokens. And they did this within their first week of operation.
A week. Nearly $1 billion worth of XRP in 7 days.
Pretty much. It means they completed something like 95% of their initial $1 billion target almost immediately.
That seems unprecedented for an altcoin, maybe outside of some early Ethereum moves. How on earth did they buy that much that fast without sending the price to the moon or getting terrible prices themselves?
That's the crucial execution detail, isn't it? If you just stomp into the public market trying to buy $1 billion of XRP, an asset whose daily spot volume was around $3.2 billion back in Q1 2025, you're going to cause chaos. You'll push the price way up against yourself. That's called slippage.
Right.
So they would have had to use much more sophisticated methods, primarily relying on over-the-counter OTC trading desks.
OTC desks.
Yeah. These desks facilitate large, private block trades directly between institutions away from the public exchange order books. It allows them to source huge amounts of liquidity without tipping off the entire market or causing massive visible price spikes.
So they buy big chunks quietly.
Exactly. They might also use things like dark pools, which are private trading venues. The sources suggest that while the buying was incredibly aggressive, it was carefully paced and managed, likely using algorithms and multiple counterparties, specifically to minimize that slippage and keep their average entry price down.
And did it work? Were the initial results good for them?
Extremely good, it seems. The reports indicate Evernorth managed an average entry price of around $2.44 per XRP.
Okay.
And shortly after that buying period, XRP was trading closer to $2.61. So just on paper, in that first week, they generated an estimated $75 million in unrealized gains.
$75 million, just from the timing of that initial buy.
Looks like it. It's a huge validation for moving so quickly. And unsurprisingly, that massive buying pressure, even if mostly OTC, did contribute to XRP's price rising. The sources mention about a 6% jump to around $2.64 around that time.
So this successful initial haul instantly makes Evernorth the dominant player in institutional XRP, right?
Yeah.
They blow past any other corporate efforts we've heard about.
Oh, completely. By orders of magnitude. You have to put it in perspective. If they cement this $1 billion treasury, they make other corporate XRP plans look tiny.
Like who?
Well, firms like Vivo Power International had talked about maybe a $100 million XRP reserve. Nature's Miracle Holding was aiming for around $20 million. Evernorth comes in at $1 billion. They're instantly the undisputed heavyweight champ of institutional XRP holding.
And this whole initiative, this momentum, it seems to be catching a wave of broader institutional acceptance for compliant XRP products.
That's definitely the wider context here. Evernorth's timing feels very strategic because we're already seeing traction for other regulated XRP vehicles.
Such as?
The REX Osprey XRPR ETF is a good example cited in the materials. Apparently, it crossed $100 million in assets under management, AUM, really quickly, like within a month of launching.
Okay, so the demand is already there.
The demand for regulated XRP exposure seems to be building in the traditional finance world. Evernorth isn't creating that appetite out of thin air. They're basically offering the most sophisticated, actively managed way to satisfy it at institutional scale.
The message seems pretty clear. Institutions getting ready, they have capital they want to deploy into XRP, but they need a vehicle that meets their compliance and operational standards. Evernorth looks tailor-made to be that vehicle.
That appears to be exactly the thesis. All right, so we've covered the ambition, the structure, the money behind it. Now we need to get into the nitty-gritty, the stuff investors really track, the timeline and the regulatory hoops they have to jump through to actually get XRPN listed on the NASDAQ.
Right, the practical steps.
The whole public listing hinges on completing that merger with the SPAC Armada Acquisition Corp. II, AACI. Good news is both boards have already approved the deal, and they've set a target for closing the first quarter, Q1 of 2026.
Q1 2026, so not immediate but not too far off.
Right. But that closing depends on a few things. The usual stuff, customary closing conditions, but the big one is getting approval from ACI's existing shareholders. They have to vote yes on the merger.
And once that happens?
Once the deal closes, the combined company officially becomes Evernorth, and it starts trading on NASDAQ under that ticker XRPN.
Okay. For anyone wanting to follow this process closely, what's the key paperwork? What are the regulatory milestones, especially with the SEC?
The absolute linchpin document is the SEC registration statement on Form S-4.
Form S-4.
Yep. That's the big, comprehensive filing required for a SPAC merger like this. It basically bundles together two crucial things.
What are they?
First is the proxy statement. That lays out all the details of the proposed merger for the AACI shareholders so they know what they're voting on. Second is the prospectus. That's aimed at potential public investors, outlining Evernorth's business model, the risks involved, its financial health, leadership, everything.
So the S-4 has to cover everything about the deal and the new company.
Everything. It needs incredible detail for the SEC. It has to explain exactly how Evernorth plans to operate that digital asset treasury, meticulously detail the risks of those active yield strategies we discussed, lending, liquidity, DeFi.
Right.
It also needs to outline the auditing plans, the custody arrangements, who their partners are, the leadership compensation, the works. The SEC review for an S-4, especially for something relatively novel like a large active digital asset treasury, is going to be thorough.
You'd expect that.
Definitely. Once the SEC is satisfied and declares the S-4 effective, then the ACI shareholders can hold their official vote. If they approve it, that clears the final hurdle for closing in Q1 2026.
It sounds like a demanding process, getting through that SEC review.
Yeah.
But the sources seem to suggest the timing for this deal is actually quite good, partly because the regulatory picture has become clearer.
Yeah, the timing seems directly linked to achieving more regulatory clarity in the U.S., particularly around XRP.
How so?
Well, XRP is often highlighted as being one of the few major digital assets that actually has a relatively clarifying regulatory framework in the U.S. now, plus that established use case in payments. That gives it an advantage over many other tokens still facing uncertainty about whether they're securities or commodities.
And specific legislation helped.
The sources frequently point to key legislative progress as a catalyst. Specifically, they mention the passage of the Genius Act.
The Genius Act focused on stablecoins, right?
Primarily, yes. It aimed to provide comprehensive regulation for stablecoins. But its impact was broader. It reportedly sparked an 18% growth spurt across the digital asset sector shortly after it passed.
Okay, help us connect the dots here for the deep dive. Why would stablecoin regulation specifically encourage an XRP treasury like Evernorth?
Good question. The Genius Act didn't just regulate stablecoins in isolation. It helped solidify the rules of the road for digital assets used in payments and as collateral more generally. It signaled a shift maybe from regulatory hostility towards more integration.
I see.
For Evernorth, having clearer rules around tokenized dollars, like stablecoins, and how digital assets function in settlement makes their core yield strategies lending, providing liquidity, using compliant stablecoins like RLUSD for DeFi access, much more predictable and legally sound under U.S. law.
So it reduced the regulatory risk for their business model.
Exactly. It gave institutions more confidence that they could allocate serious capital to something like XRPN without falling foul of ambiguous regulations down the line.
And the CEO confirmed this.
Yeah, Ashish Burla explicitly said that regulation has shifted from being an obstacle to actually being a catalyst. He thinks it's attracting a completely new class of institutions, and that the U.S. is now better positioned to lead globally in digital asset regulation. That regulatory confidence is really underpinning this whole billion-dollar bet.
Okay, but this regulatory comfort, this massive capital raise,
Yeah.
it leads us straight into a potential market issue, the supply shock warning. We know the money is lined up, but when it gets deployed seems incredibly important.
Yes, this is a critical point raised by analyst Vincent Van Code, the risk of a potential supply shock. We have to be really clear about the difference between the capital flow during that initial buying spree versus what might happen after the IPO.
Okay, explain the difference.
Remember that first $947 million chunk of XRP they acquired super fast? A significant portion of that seems to have been XRP tokens contributed directly by early strategic investors like Ripple itself, maybe Chris Larsen.
So it wasn't all fresh cash hitting the exchanges.
Correct. While it massively boosted Evernorth's Treasury holdings, it was more like an internal transfer or prearranged contribution of existing tokens. It locked up that supply within Evernorth, yes, but it didn't necessarily represent $947 million of new buying demand hitting the public market order books at that moment.
So the initial phase tightened supply held by Evernorth, but maybe didn't dramatically shrink the circulating supply available to everyone else.
That seems to be the nuance. The real potential market impact, the supply shock, is tied to what happens after the successful closing in Q1 2026.
What happens then?
That's when the billions raised from the public, listing fresh cash coming in from traditional equity investors, buying XRPN stock might get deployed relatively quickly to buy the rest of the needed XRP, this time potentially straight from the open market.
And that's the potential shock.
Exactly. If you suddenly have potentially hundreds of millions or even billions of new dollars trying to buy XRP on public exchanges, hitting a supply that's already been somewhat tightened, that sudden massive demand spike could overwhelm sellers. It could drive prices up very sharply, very quickly, causing extreme volatility. That's the supply shock scenario Van Code is warning about.
Wow. So the actual closing date, the SEC S4 approval, the shareholder vote, they become incredibly significant timing markers for the XRP market itself.
Absolutely. You're looking at a situation where the successful completion of a traditional finance equity offering on NASDAQ could become an immediate, powerful demand driver for a major cryptocurrency.
That creates a really interesting feedback loop, doesn't it?
It really does. Think about it. If the XRPN stock launches successfully and performs well, it might attract even more capital. That capital then needs to buy XRP, potentially pushing the XRP price higher due to the buying pressure and induced scarcity.
Which in turn makes the XRP held by Evernorth more valuable.
Exactly, which boosts the value of the XRPN stock itself for its shareholders. It could become this self-reinforcing cycle, driven by institutional flows channeled through a public equity vehicle. We haven't really seen that dynamic play out at this kind of scale for a major crypto asset besides Bitcoin. It's fascinating.
Okay, let's pivot now to the bigger strategic picture. Evernorth isn't just a pile of XRP aiming for yield. It seems positioned as a crucial piece of infrastructure, an institutional gateway for the entire XRP ecosystem. How does this fit into Ripple's grander vision?
You're right, it's deeply strategic for Ripple. For years, Ripple's core mission has been promoting XRP's utility for efficient, cheap global payments and settlement.
Right, the cross-border payments use case.
Exactly. Evernorth provides what might have been a missing piece, a massive, audited, publicly traded vehicle that essentially guarantees deep institutional engagement with and demand for XRP itself as an asset. It helps institutionalize the asset side of the equation.
And the leadership change we talked about signals something important about the relationship.
It does. The fact that Ashish Birla stepped down from Ripple's board to become the full-time CEO of Evernorth is a very deliberate signal.
Signaling what?
Operational independence. For a company listed on NASDAQ, especially one attracting broad institutional capital, demonstrating clear independence from its major backers, like Ripple, is crucial for governance, for regulatory perception, and just for attracting investors who aren't already tied to Ripple.
But the ties remain strong.
Oh, absolutely. The alignment is still profound. Ripple is confirmed as a key strategic investor in Evernorth. And significantly, top Ripple executive CEO Brad Garlinghouse, Chief Legal Officer Stuart Alderoty, and CTO David Schwartz are expected to act as strategic advisors to Evernorth.
So they provide guidance, but don't run the show day to day.
Precisely. It maintains that vital strategic connection, ensuring Evernorth's actions consider the long-term health of the XRP ledger ecosystem, but without Ripple having direct operational control. It's a balance between alignment and independence.
Brad Garlinghouse had a quote about this, didn't he? Expressing confidence.
Yeah, he basically said he had full confidence in Ashish Birla and the Evernorth team to take XRP's presence in capital markets to the next level. It really frames Evernorth's role as extending Ripple's mission into the institutional capital markets domain.
It makes sense. Ripple focuses on the payment utility. Evernorth focuses on the assets capital markets utility, making XRP a viable, liquid, yield-bearing collateral asset for big institutions.
The two missions really complement each other. One drives operational use, the other drives asset demand and institutionalization.
So, drilling down further, Evernorth isn't just going to hold XRP passively, even beyond the yield strategies. It's meant to be an active participant in the XRPL ecosystem itself.
Yeah.
What are the specific plans there?
Yes, they've outlined several ways they intend to actively contribute, moving beyond just being a large holder chasing yield. Three key areas stand out.
Okay.
First is direct network participation, validator operation. Evernorth plans to run multiple XRP ledger validators.
Why is that significant?
Running a validator is a technical role that helps secure and confirm transactions on the network. By having large, well-resourced, credible organizations like Evernorth run validators, it strengthens the overall decentralization, resilience, and security of the XRP ledger. For big enterprises considering using the XRPL, seeing entities like Evernorth actively supporting the network's infrastructure builds a lot of confidence.
Okay, so supporting the core network health. What's second?
Second is that DeFi integration piece we touched on, but specifically how it benefits the ecosystem. The plan is to use Ripple's RLUSD stablecoin as that compliant bridge into XRP-based DeFi.
Let's unpack the significance of RLUSD again here. Why is the stablecoin so central to this institutional DeFi play?
Okay, think about it from Evernorth's perspective. They have potentially billions in XRP. They can't just throw that into unaudited experimental DeFi protocols. The risk is way too high for a public company. RLUSD is Ripple's regulated US dollar-backed stablecoin. By using RLUSD, Evernorth creates a sort of compliant corridor. They can potentially convert some XRP to RLUSD within a regulated framework, deploy that RLUSD into specific vetted DeFi protocols on the XRP ledger, like lending pools or yield farms, earn yield, and then convert the proceeds back to XRP, all while maintaining an auditable trail and using a regulated stablecoin.
So RLUSD acts as the compliant on-off ramp for them to access DeFi yields safely.
Exactly. It lets them tap into those native ecosystem returns, boosting their XRP per share, but using a tool designed for compliance. It shows they aren't shying away from DeFi entirely, but they're approaching it with that institutional, risk-managed, compliance-first mindset. And using RLUSD actively helps build utility and liquidity for Ripple's own stablecoin, too.
Okay, validators, compliant DeFi access via RLUSD. What's the third area of ecosystem participation?
The third is broader market development. This is about Evernorth using its significant capital and XRP holdings to actively support projects and initiatives that expand XRP's real-world utility.
Like what kind of initiatives?
Could be providing seed liquidity for new financial products built on the XRPL, investing in infrastructure that makes the ledger easier to use for institutions, participating in tokenized asset projects. Basically, deploying capital strategically to help the ecosystem grow and mature. They're positioning their huge treasury not just as a holding, but as a strategic capital pool to accelerate the XRPL's overall development and adoption.
This really reinforces that whole philosophy. Ashish Birla talked about building that bridge between traditional finance and decentralized finance.
Yeah, he was very clear about needing to build responsibly. He explicitly contrasted it with the old move fast and break things crypto mantra. Evernorth seems focused on simplifying institutional access, yes, but doing it while embedding those rigorous compliance and risk controls needed to attract long-term, stable institutional capital, not just speculators.
Which loops us back perfectly to that concept you mentioned, the symbiotic model.
Exactly. The whole strategy seems designed so that Evernorth's success is intertwined with the success of the XRP ecosystem.
So,
Every action Evernorth takes to boost the XRPL running validators, providing liquidity, funding new projects, driving compliant DeFi via RLUSD makes the underlying asset XRP more useful, more liquid, potentially more valuable.
and that increased value and utility directly benefits Evernorth's core mission.
Which is growing XRP per share for its equity holders. It creates this powerful mutual incentive structure. When the ecosystem thrives, Evernorth thrives, and vice versa. It's embedding institutional capital directly into the fundamental growth drivers of the network.
It definitely sounds like a meticulously planned institutional playbook, finally applied to a major digital asset that seems to have navigated the regulatory hurdles, at least for now.
That seems to be the proposition, yeah. Hashtag tag outro.
Okay, wrapping up this deep dive, it's clear Evernorth is much more than just another large crypto fund. This feels like a deliberate strategic infrastructure build, aimed squarely at institutionalizing a major global digital asset.
Yeah, let's quickly recap the main takeaways for everyone. First, and maybe most importantly, Evernorth is conceived as an active digital asset treasury, a DEET. It is not a passive ETF. Its whole reason for being is to actively manage its XRP holdings through institutional lending, liquidity provisioning, and careful DeFi plays, all aiming to grow that XRP per share value. That's where the crypto Berkshire Hathaway comparison comes from.
Right. Second takeaway. The institutional backing is serious. That $200 million cash commitment from SBI Holdings is huge, and having players like Ripple itself, Pantera, Kraken, and GSR involved provides broad validation from across the financial and crypto spectrum. It confirms genuine institutional belief in this structure.
Third, the timeline. The target for the actual NASDAQ listing under XRPN is Q1 2026. That depends on successfully navigating the SEC review of the Form S-4 registration statement and getting shareholder approval. And this whole process seems significantly boosted by the recent gains in regulatory clarity in the U.S., particularly things like the Genius Act setting clearer rules.
And finally, the fourth key point. Evernorth isn't just about generating returns. It's positioned as a vital institutional catalyst for Ripple's long-term vision for the XRP ledger. By running validators, using RLUSD for compliant DeFi, funding market development, it's designed to actively drive the ecosystem's growth and utility, aligning its own success with the network's success.
It's really about deep integration, aiming for that systemic impact.
Definitely. Which leaves us with our final thought, something for you, our listeners, to really chew on as you watch this unfold. Track that S-4 filing and wait for news on the Q1 2026 closing. We've established Evernorth's explicit goal: grow XRP per share through active strategies. We've heard the warnings about a potential supply shock when all that IPO cash potentially hits the open market early next year. So the provocative question is this.
If Evernorth's active strategy actually works, if XOPN becomes a successful stock on the NASDAQ and its valuation climbs, how does the performance of this traditional equity fundamentally change the game for the underlying digital asset, XRP, trading on crypto exchanges globally?
Are we entering an era where the success or failure of a single TradFi stock could become a primary driver of the price, the liquidity, maybe even the perceived utility of a major global digital asset used for payments?
That potential feedback loop where TradFi equity valuation directly fuels crypto asset price discovery and vice versa is probably the most fascinating and perhaps unprecedented dynamic to watch as we head towards Q1 2026. It could really reshape how these markets interact.